Well, hello, everybody, and welcome back to the Oil and Gas Rundown here at King Operating. My name is Rachel Griffith, and I'm a Senior Vice President here at King Operating. And today we are excited to be with you again live for the very first time in 2026. So Happy New Year, everybody, from all of us here at King Operating. We're excited to talk to you about some of the events going on around the world in the energy sector, and of course, bring you some information on practical oil and gas operations and what's going on a little bit here at King Operating. So today I have some incredible gentlemen here from our operations team. We have Aaron, who is from our land and business development. Aaron, can you say hello to everybody?
Hi, how's it going?
Yeah, and we have Kelly Duncan, who's here with our operations team and our executive of engineering. So hello, Kelly. Kelly, we didn't hear you. Can you say hello?
How are y'all today?
There we go. There's Kelly Duncan with us. So we want to start off today a little bit, Aaron, by just talking about oil and gas prices, right? Obviously, everybody knows that we are kicking off 2026 with some very interesting geopolitical events happening around the world. Of course, we're all looking at Venezuela, some of the events that have happened there, and we're not trying to get too political. We're really trying, Aaron, to stay with the prices of oil and gas and how some of these geopolitical events are affecting maybe prices. So what are you seeing right now, Aaron, as far as starting off 2026 with oil and gas prices? What are we looking at right now? What are some of the driving factors?
Sure. Well, Rachel, I just checked a little while ago. WTI, West Texas Intermediate, is right at $56 a barrel, which that's low for us, and we like a little bit higher prices than that. I know this is probably close to 20% down than it was 4 or 5 months ago, but there's just so much going on, and as you mentioned, the geopolitical events have a lot to do with that. To me, the overriding factor is the oversupply that we've currently been experiencing. There's a lot of factors that go into that. OPEC last year started producing more oil, after years of kind of curtailing. And then we've also had, as far as worldwide, a little bit of I think an economic downturn or a slowdown. And, those are all just headwinds that really put a lot of pressure on the pricing. And, we also have a current administration that I think is looks at oil prices, as keeping them down. One thing that is a real positive about keeping the price down is that really helps keep inflation a little bit lower, and trying to give people a little bit of a break at the pump on the gas price. So that's what low oil prices can do. There are some positives, but here at King, we're into drilling wells, and we like to see a little bit higher prices. And it's just we no matter where they're at, 55, 70, where, we're trying to make the best decisions on what to do. But we want to be drilling wells, as we're doing right now. And Kelly will talk a little bit about that. But going back to oil prices, there are just so many factors. The geopolitical factors, we could spend an hour talking about Venezuela and how that could affect things. It's my personal opinion that that's not going to really affect things. That's just more of that larger geopolitical kind of volatility that we're having to deal with. Maybe several years down the road, I could see something like that affecting us. But one thing that people should know, especially about Venezuela and the oil, it's completely different oil than we have here in the U.S. It's heavy, sour crude. I mean, Trump talked about bringing in millions back from Venezuela, and they can do that, but there's going to be a lot has to happen. A lot of infrastructure has to be, repaired. They're going to have to refine that heavier oil, which we can do here in the United States. But I don't think it's going to affect the U.S. as much as you have countries like Canada, who also produce a lot of heavy, sour oil. So, I'm not as much worried about, the Venezuela effect, but there's just a lot going on out there, whether it's China, Russia. I mean, wherever you turn, there's contributing factors that are affecting these prices. And for now, they're low, but as a company like us, what we have to do, it just kind of makes us become more efficient. And, maybe we might not drill as many wells. We might have more time to find better quality wells. We're still going to make it happen, but we definitely don't like where the oil prices are right now. We want to see them higher. I do think we might be dealing with these lower prices, and this isn't my. I read a lot about this. I think it looks go like quarter one going into half of next year. Prices are going to be kind of trading around $60. But what I always like to tell people is at any point, some geopolitical factor, whether it's just like when Russia invaded Ukraine, I mean, prices shot up to over $100. I mean, we could look up and a month from now, something happened and oil prices go up to $90, $100. It's so volatile. And we just have to be prepared here at King to deal with it, no matter what the price is.
Absolutely, Aaron. I think you brought up some really great points. Of course, for us, when oil is low, there's disadvantages and there's advantages, right? Of course, we love to see a nice high oil price, but the advantage for us, and we'll let Kelly talk about this more, is that when prices are low, I know that Kelly's able to go out and he's able to grab some operators that can, definitely get on a rig and start drilling some oil much faster and much more economical for our investors. So we'll hold off and let Kelly dive into that in a minute. But, absolutely. As far as Venezuela goes, I think from what I understand right now, they're producing about 900,000 barrels a day, right? Quite a low number of barrels from the last time I checked. And, they have got an incredible amount of work that's needed to be done in the fields to actually make those oil fields productive, right? So we're looking at massive amounts of infrastructure that is needed. We're probably looking at 5 years, maybe 10 years until you could actually reach a peak production in Venezuela. And of course, looking at developing nations, there's incredible amounts of challenges on all aspects, right? And I know that they've already got billions and billions of dollars in lawsuits that they're having to pay out to former oil and gas companies for a plethora of different reasons. So I think for investors out there looking at Venezuela, they need to relax and realize not really probably going to impact oil and gas in the United States for a substantial amount of time if we even get to that point in 5 to 10 years. It's definitely going to be a journey. Would you guys agree with that assessment?
I agree. I do.
All right. Yeah. So everybody's very keen on looking at Venezuela, but we got a long ways to go. There are a lot of things that, who knows, honestly, who knows what could happen with Venezuela. So as far as U.S. oil and gas production goes and infrastructure investment and production in the U.S., oil prices a little bit low, but hey, we got to keep production up, like Aaron said. And what do you think, Aaron, for investors, what would be what really matters versus the noise right now?
I mean, just keeping a close eye on the supply. That's the, like I mentioned earlier, oversupply. That's the big, to me, the biggest factor. And you're going to see, it's inevitable. You're going to see some drilling cut back, and you'll see some drilling in the Permian cut back, and that just has to happen so that everything kind of balances out. What we're always dealing with is a pendulum, and anytime it swings one way, it's going to go back the other way, and we just have to be prepared for that. So I just think as far as executive level, it's just really honing in on becoming more efficient. And I think Kelly will talk a little bit more about that, because that's what, to me, the biggest impact is the efficiency and the cost for bringing these costs down by being efficient. And that's something I feel like Kelly's really good at.
Yep, absolutely. All right, Kelly, here we go. So, I mean, I'm going to give you a chance also just to kind of chime in on the thoughts about Venezuela. Anything you want to add to that for U.S. investors?
Well, I'll parlay what both of y'all said already. With oil prices, but I'll use the word suppressed a little bit, and the world market kind of volatile right now. It does, as you mentioned, Rachel, it does bring up the opportunity for great pricing on the capital expenditure side. So although we're not getting maybe per price per barrel, but the rates for certain materials and services is definitely down. Availability is up. Supply demand, simple as that is. So with the prices down, we can still sometimes meet the same economic goals or targets, rate of return, return on investment, all that stuff, by reducing our capital. So I'm always trying to improve our efficiencies but B, sometimes certain things are just there, right? Like the cost to build a house, but the price of lumber goes down 50%, the cost of a house goes down 20 to 30%, so same kind of thing here with oil. The certain vendors, certain raw materials come down. One thing for me, mud products right now, mud chemicals are way down. So my mud bill, which is probably one of the top four vendors costs in the design and drilling of a well, are down just because raw materials are down in price. Therefore, we kind of feel that benefit. So that could bring hundreds of thousands of dollars off my capital expenditures on a well, which we all know, money in, money out. So even if we're getting less money out, but if we put less money in, we might still make the same return on investment there. So there's definitely that going on in the world right now. And because of that, you get to handpick your people as well. You're not when things on an uptick or a boom. Sometimes you just grab any warm body you can get right now. You can handpick people that great experience levels, knowledge in your area, subject matter experts, all that stuff are available right now. So the team I've built, I've got a strong team, and sometimes I lose those people short term because I've got other projects that are on. Every person I want in my team right now in the field, I've got them on staff right now. I have a whole staff full of experts going on right now. So that's one of the benefits to this suppressed price environment.
Yeah, that's such a great point, Kelly. We've seen that in every downturn, right? I mean, every economic downturn or global crisis, world crisis, you can actually see where people were able to capitalize on those times. And for us, as an oil and gas direct operator, that's what Kelly's saying. We're able to capitalize on, even though it's lower gas prices, lower, oil prices, we're actually able to go out and find a better deal, get a better deal. And I know Jay Young's not with us, but we love good deals. We love good people, and we're able to put that to work for our investors. Even when we see oil prices dipping, that can be a huge advantage to us. And that's actually a plus in our investors' pocket. So absolutely, Kelly. Let me wrap you back. Go ahead.
You mentioned oil and gas prices, and that's one of our goals here at King. We're not an oil company, we're not a gas company.
Yep.
We're both, right? We're an oil and gas company, energy company, whatever you want to call us. I like ONG myself.
Yep.
So we're not exactly 50-50, but we're pretty darn close. Depending on how you define those numbers, volumetrically or financially, and those things change every day. But we're diversified, right? I'm big on not putting all our eggs in one basket. We've got diversified assets, but in those assets, we're pretty much 50-50 oil and gas. So the nice part about, we're talking about the world market right now, the gas prices are much more domestic. They're going to go a little more globally affected as LNG continues, but that only helps us in the better. But the nice part is, although the oil market is heavily suppressed right now, the gas market's not near as suppressed. So we're chasing assets that make both oil and gas, so we can benefit. And then more importantly, we're chasing rich gas assets, which are one of my favorite things, and a big part of my career is chasing rich gas. Rich gas it has some extra benefits over even New York stock prices. So I really like that we've got some really rich gas assets in our portfolio, and that helps us get through some of this financial downturn.
Yeah, Kelly, I love that you brought that up, because I did lump them in together, but really we lump them in together, right? BOE, but they're actually separate. Oil and crude can be trending a bit lower and, having a bit of a downturn. Well, we see that natural gas and LNG exports can actually be trending upwards. So I think that's a great point that you brought up. And I love that we have both in our portfolio. So kind of leading off of that, Kelly, let's talk about Bivins, because I know that Bivins Ranch is such a gorgeous location for us. It's providing both of that great crude oil, but also natural gas. So I'm going to have you first start us off with just an update on how Bivins Ranch is going.
Yes, ma'am. Well, as any of y'all watched us for the past year, Bivins was our primary project, not our only project, but our primary focus project. Our team, Aaron and my team, this end of the hallway over here, have been focused heavily for the last year and a half on it. Started executing it just at a year ago, 12 and a half, 13 months ago. Got the wells drilled the first half of the year, got them completed the summertime, got them on this fall. Real happy with the results on the first two wells. Couldn't be happier. We've got one of the wells. Both wells are good. One of them could be, of all the wells out here with some new technologies we've used, could easily be the best well, top the original 20 wells out here just in its first few months of production in performance. So real happy with the performance. That was a great segue for us to get into pad number 2, our 104 pad, which last time me and Aaron were on here about a month ago, and even the last meeting, the last one of these videos y'all had, we hadn't quite started yet. I was just about to kick the project off. Kicked it off the day after Christmas, so we're in day 11 of operations right now. Things are going great. Things are going smooth. Learned a lot last year. Hadn't had anybody in that area in 10 years, so there were some learning curves. Felt it, lived it. Had that pulse all year last year. Had the summertime to do a lot of deep dive research, pull in my vendors, really kind of re-engineer and analyze what we did right, what we did not so right, and we made some changes, minor as they may be, and we're real happy so far. Things are actually ahead of schedule right now. I'm not big on bragging on operations because I'm a big fan of jinxing, but things are going per plan or better than planned right now. So if you keep seeing me turn my head to the left here, I apologize. I'm watching the live stream of the drilling rig as I'm on this video. Also, we're at a critical phase right now. Just TD an important hole section, and I'm watching videos of the rocks coming back across the cuttings come across the shakers, and real happy with what I'm seeing. So as soon as I get off here, I'll be on some calls with my field personnel, see how all that's going. So real happy with how pad 2 on the Bivins is going, and look forward to turning those wells on sometime in the second quarter of this year.
Yeah, I love that. I know you said the live stream is going, and I was going to hop off this live stream, and I'm going to come over and check out your live stream shortly after this. I want to see a little bit of what you're seeing as well. But tell everybody out there, what do you look for? What are key milestones, or key things that you look for progress in a drilling stage, right? So you're watching it right now. What are some just for those who are learning about oil and gas, what is it when you're watching a live stream? What are you looking for that you're like, oh, looks great, or might be trouble on the horizon?
As engineering and operations, numbers are our key, right? And numbers and benchmarking, right? So when I budget a well, when I AFE a well, you'll hear me say that word often. Stands for authorization for expenditure. When we budget a well, basically put the cost estimate together, so we know what we think we're going to spend. A large portion of that is built on time, and therefore we come up with a curve called a set of charts called DVD, depth versus day. So that's what I track above everything. So how much footage was made in the last 24 hours? We just 6 a.m. to the next 6 a.m. is the traditional standard that I measure by, and most people do. And we're just looking for how much progress is made each day. And we know this based on offset data and compare it to that. So the next word I like to use, and I actually have my DVD spreadsheet is actually called, there's a tab in there called benchmark. And what I do is I take the history of the data in the field or in an area or in the expectations, and I build models. I'm not cool enough to use AI models for this yet. I do it the old-fashioned way in Excel and do a lot of averaging, and I figure out the average, mean, median, mode of performance, right? So, and with that physical measurement of depth and performance and penetration rate, another word we use often, is the cost that go with that. So I have roughly built into cost per hour. I can actually give you cost per minute on bigger projects. We do cost per day, but I can divide that by 24 and give you cost per hour. So I can calculate what sections a hole is based on timing and the monies that go with that. So I track another curve called CVD, cost per step, and each morning I present to our management team an update on where we are versus our benchmark or our average. And again, we're what I would call, it's actually behind, but we call it ahead of the curve. But when you talk about cost, so in speed and depth, I'm ahead of the curve. In cost, I'm behind the curve, and that's how I benchmark myself. And there's also a joke in the oil field. I saw a video last night about golfers. There's also things as sandbagging, and you're kind of overestimating your cost. I actually measure myself and try to get cost. I do a plus or minus 5%. So my goal, I pat myself on the back. I mean, obviously, if I step change something and have a huge saving, but going forward, I bring my cost down. We don't sandbag here, right? We try to we try to engineer and design a well plan and a cost, and we try to meet that goal, right? Lofty or, actual, obtainable, not lofty, I'm sorry, and get it and then beat it and continually improve. So we went from exploration phase a year ago to improvement phase 1, I would call it now. And some of the changes we made, we're already seeing the fruits of our labor, and we're seeing the benefits of that. using some of the same vendors that we, lessons learned. We had a lot of meetings on lessons learned and what was good and what was bad and how we can capitalize on the knowledge from both of those. So we're ahead of the curve right now today.
Yeah, that's fantastic. Always. I mean, it's oil and gas, right? So, so you could be ahead of the curve, or there's times where people have to say, "Oh, we're not so ahead of the curve," but we're very happy that on Bivins Ranch project we are ahead of the curve. So, like you said, we have two wells that are drilled, producing online, and there's still some. You're still waiting for full production. Is that correct, Kelly? You're still pulling off frac water.
We're pumping, we're flowing good, but there's still room to grow. So I'm conservative in lots of things in life, and one of those is well flowbacks, right? Some of the large corporations see the benefit of instantaneous rate of return, but sometimes that damages your reservoir. I believe in drilling and completing wells, and more importantly, producing and flowing them back to maximize value, maximize hydrocarbons out of the earth, get the most bang for your buck. And one of those is to be not overly conservative, but not to also, not to pillage the earth. You know what I mean? So we control produce these wells. We're real happy with the performance. I think it protects the reservoir for long term and gives these wells a 20-year life. Still get maximum value out of the first 2 or 3 years. But also at the same time, I've worked for larger companies at the start of my career where we were rate driven, not value driven. And I have a sign in my office and that reminds me every day to say I as an oil and gas operator, I'm value driven, right? So sometimes part of that is, as I mentioned earlier, not spending too much money. So in some of those projects early in my career, we spent extra millions of dollars just to get that rate. We were rate driven. And then if you did 2 years later, you did the reverse calculation, spending the extra $2 million to get an extra 100 barrels of oil faster didn't make sense. So I'm blessed with our management team here. They really listen to their tech team, and we balance all that, and we're we're value driven, and that is one of my key engineering principles in my career is to be the strongest to be value driven.
Yeah, I absolutely love that. Value driven is definitely something that I believe matters, and I love that our team values that. And when you think about investors, you want them to realize we value their investment, we value them, we value what we do, and how we drill is so important, and the earth is important. You think about, it's incredible how much the earth gives back to us, and what a blessing it is when it's just producing hydrocarbons over and over again, and really taking care of it is incredibly important. And utilizing and using it correctly and for the long term is important to us. And I love that, value driven. So anybody out there watching, remember that when you think of King, think of value driven. Aaron, do you love that? I know you're a landman, so you're out there. Yeah. You're out there with the earth, walking it, looking at it, enjoying the beauty of probably thousands of acres of land. And it's beautiful. I mean, a Texas sunset is a gorgeous thing. So, valuing how we treat it.
Yeah, I love being in the field for sure.
Yeah. You see, Aaron, over your time, have you seen some oil and gas companies who just really don't take care of what they're doing?
Oh yeah, the majority. No,
no value in it.
Well, it's understandable that everybody's really watching. The most important thing for a lot of companies is the cash flow, and they're driven by the dollar, and that's all important. But we do have to be mindful of the land, mainly for like the surface owners. I mean, we're going into areas where we've obtained the rights to the minerals, but there's usually surface owners, and we want to go in there and do our job, extract the minerals we need to, but leave it the way it was before, and that's kind of a goal.
Yep, and I love that, and I bring this up because Aaron is on here, and one of our last webinars, we talked about, orphan wells and wells that have been abandoned and are still seeping hydrocarbons or methane gas. And that's why I bring it up, is just making sure that when, an oil and gas operator is drilling, that they're taking care of that well from the life of conception to the ending stage of that well. And that's very important, Aaron, correct?
It is. It's the full life cycle. And, it's important to stay the course, but it's because a lot of companies don't worry about that. That's the reason we have this orphan well problem. But there's a lot of people understand the importance, and I think now a lot of state governments, the regulatory agencies, they all know how important it is. So, I mean, it's just something we have to do. Like I said, it's part of taking care of it. We love to extract the oil and gas and make all the money, but we also have to give back and take care of the environment. And it's important.
Yep, I love that. And I love that King makes sure that when they start a project, they're going to make sure that it's finished to the end correctly. So value driven. I love that, Kelly. So Kelly, what do you think as we're jumping into 2026 with Bivins Ranch? What should investors be most excited about on the operational side?
I'm excited to get the second pad turned around. We're a lot closer on our partnership with our midstream company. So my goal, what I'm excited about here is get these drilling rig done quickly. And I'm already, even though I'm neck deep and eyeball deep in drilling operations right now, I am also on the side. I am reviewing and already working on completion details for these wells. And one of my goals for this first quarter this year is the second that drill rig rolls off the location, I plan on having the frac crew rolling right on. So I love short turnaround times. Even the drilling takes a little longer than we'd like. I want to come in with a frac crew right away. And I'd love to be able to say that we, spud this thing the week of Christmas, and by as fast as we can, we have hydrocarbons to surface on the completion side. So that's my big goal right now, is get the drilling out of the way and immediately come in and complete these wells. And with partnerships we have and a team we've got, we can definitely execute that now. So I'm real excited to. I'm already excited. Barely spudded, and I'm 10 days in, and I'm already thinking about the production of these wells. So we've seen what they do. We've seen how good they can be. We're already working on improvement, minor chemistry and other things, tweaks to our completion design, so we can get more bang for the buck for everybody. So and we anticipate, and back to our original question here, the almighty dollar, we anticipate the first quarter, frac pricing to be great. It was good third, fourth quarter last year, and it's going to be good for the operator side, really. So I want to be able to capitalize on those low, cost-effective, but quality frac designs, and bring down the capital costs so that we can help the investor all the more. Less money in, the more money out. The less money in, though, the better the economics of the project is. So that's the part of this. None of us can really control commodity prices. We know that, right? If we all had a crystal ball, we'd all be rich and wouldn't be sitting here today. But I can, me and my team can heavily control what we spend, and timing to using vendors when prices are good is one of those things to do to keep capital expenditures down, which that is the box that I can control, part of the equation, the variable that I can control the most.
Yep, absolutely, Kelly. So we're very excited about where we are right now, King operating in 2026. And I would just say, despite all the commotion and things going on in the world, and the information about Venezuela and all of these geopolitical events, I think to each investor out there, keep your eye on the prize, right? Keep your eye on the fact that oil and gas in the United States has been one of the strongest commodities that there has been in the past 50 to 100 years. It's going to stay that way. Even when it dips down, it comes back up. So we're excited about where we're at in 2026 and where we're headed. If you want more information about our opportunities, please contact us at kingoperating.com. Drop a comment below. Ask any questions that you might have about what is happening in the energy sector here in the United States or around the world, and we'll do our best next Wednesday to try and answer those questions. So we greatly appreciate you tuning in with us this Wednesday. Make sure you join us for the next oil and gas rundown. Same time, same place. We'll see you next week. Thank you, gentlemen, for joining me today, and I'll see you next time.
Thank you, Rachel.
Bye.